Artesian began as a group of 5 individuals leaving a large investment bank, fairly disillusioned with the model, wanting a change, wanting a fresh way of doing things. We wanted to work in an organisation that was a meritocracy. We wanted transparency, we wanted integrity, we wanted to work with people we liked, and we didn't want to work with people we didn't like. And so we set off on the journey of running our own business, and 13 years later I think we've achieved much of that. We've still got a way to go, but I think we've kept those core principles close to our heart. I think investors like working with us because we demonstrate those values: integrity, transparency. We have a range of really interesting asset classes that we offer for investment, and we're always coming up with new ideas and new ways of doing things.
Artesian started by running a credit arbitrage hedge fund. We then expanded around the world to Asia, including Singapore and Shanghai, and then we actually started an early stage venture capital business in Australia. My main focus at Artesian Capital Management is running the global corporate bond business and also setting up the Australian corporate bond business and also raising money for most of our funds around the world. And one of the features of the fund is that we might be an Australian fund, but we're using our resources all over the world. We have resources in the UK, in New York, in Shanghai and Singapore. All those resources we're going to use for the Australian Corporate Bond Fund with regards to research, with regards to market information, and with regards to working out the technical features of all the bond markets at any particular time. Not many other Australian boutique fund managers have those resources or can lever off an international presence.
At Artesian, we're building a multi-strategy alternative asset business. So this includes venture capital, early stage, late stage, corporate bonds, and equity-based crowdfunding in startups, property and credit. Artesian started investing in early stage venture capital 7 years ago, primarily because we saw there was a lack of professional investors in that market in Australia and in China. By professional investors, we mean investors who were going into the asset class with an investment strategy. So we began initially by investing our own money in Australia, and we continued to do so in China. And then 4 years ago, we began raising third-party capital and created the first of our early stage VC funds, the Sydney Angel Sidecar Fund. Our model is unique in Australia in that we partner with incubators, accelerators, universities, research institutes, anyone that's got, good repeatable deal flow. So these organisations, they attract a large number of startups. They have the ability to process and filter those, probably discarding up to 90% of all applicants. We then invest in everything that comes through. Now the proposition for our investors is that they get the opportunity to invest in all of those businesses.
VentureCrowd was effectively established to help distribute excess capacity from AFOF. So what it allowed us to do was provide opportunities in de-risk startups that emerged from our funnel that due to capacity constraints the fund couldn't take. It allowed us to offer that, or provided us with the distribution channel to offer that to our investors. We've since grown that so that people from outside of AFOF can actually add curated alternative asset opportunities to their traditional asset portfolios. VentureCrowd provides our investors with access to alternative investment opportunities that they would otherwise not have access to, either because they don't have the network, they don't have the skill set, they don't have the time, or they don't have the required amount of capital to participate. We are a multi-asset class platform. We obviously leveraged our strength in venture capital to offer de-risk curated startup opportunities to our investors, which helps them diversify their portfolio. But we also identified other opportunities out there, such as alternative property and alternative debt, which our investors can use to diversify their traditional asset portfolios and gain the benefits of alternative assets.
Our funds are available to wholesale investors, and in Australia that means investors with more than $250,000 in income or investable assets of more than $2.5 million. So our funds are compliant with the significant investor visa program, meaning that applicants into the SIV program are able to put their venture capital money into our venture capital funds and able to put their balancing investment into our corporate bond fund. Looking to the future, funds administration, we want to build a funds administration business here in Australia, particularly for the venture capital industry. Corporate advisory, there's a lot of interest in that from the corporate sector here in Australia, and building the venture capital business we have here offshore through Southeast Asia and the Middle East.